The sell-off continued on Wednesday and through Thursday, and with human action seemingly unable to explain what happened, especially at or around the 3 p.m. selling peak observed on both days, attention focused on the quants, the algorithms, and the machines that may have been involved in the indiscriminate selling. In other words, we are witnessing the rise of the machines. Let's take a look. We're looking at the 20-year monthly chart on the Spiders SPY, close on Friday, 275.95. And as you can see here, the prices are elevated well above the 20 EMA, unlike the correction back in 2015, 2016, we went under the 20 EMA and bounced off the 50 EMA. Earlier correction this year stayed above the 20 EMA, and we're still above the 20 EMA. But here's a little bit of risk that I don't like to see, is the double top in the MAC, double top there. We go back, and I'm not sure if you can see a double top in this area. Perhaps there is a double top back here right before the great financial crisis, and I'm not sure there was a double top at this point though. But I don't like to see double tops. Fast line looks like it's attempting to move down and through the slow line. That would not be good necessarily. So we'll have to watch that. Here we see the MAC histogram, exactly what I just indicated to you. We're still above the zero line, but it looks like it might want to go below. The RSI shows that we're going to head on down, the stochastic as well, and the volume is actually tapered off somewhat, so maybe that's in a better position. But the Williams looks like it wants to head down a little bit. Not sure if it's going to go below the midline or 50. We'll have to wait and see. Back up to the price chart. Again, well elevated above that 20 EMA, and hopefully we can stay above that. So now let's go to the weekly chart. This is the 2-year weekly chart on the spiders. As you can see here, this last week we plunged down to the 50 EMA and maybe just slightly below that. Back here in February of this year, we came down to the 50 EMA, bounced up and retested here in the April timeframe. So hopefully that's as far as we go. But let's take a look here. Looking at the MACD, this correction took us quite some time before we bottomed. I would expect with a decline like this that this is going to take some time too before we bottom. So we'll just have to wait for that. Looks like the MACD histogram is showing the same. We're plunging down in the RSI as well, going much lower on the RSI here than we did, say, back here and here. Looking at the stochastic shows us the same thing. Fast line moving down quite quickly. The volume, not as bad as it was here in early February of this year, but we'll have to wait and see on that. We only had 2 days of strong selling. We may have some more selling coming up into next week or so. The Williams is about the same as it was back early this time here. And then, of course, here we just went slightly below the negative 80 there, and that was a retest. So back up here, looks to me, though, that we have some more pain ahead for us. Not sure exactly how significant it is, but let's take a look at the daily to see if that has any indication for us. We're taking a look at the 1-year daily chart. I'm using a 1 year because I want some context with regard to the sell-off in early February through April. And we can see that from this level here, we had a pretty good sell-off this last week or so. And this one here in early 2018 started there and headed on down. Now moving here into the MACD, the elevation was much higher here. So hopefully the old adage, the taller they are, the harder they fall, is going to take place because we're not as elevated as high here. So maybe the sell-off isn't going to be as long or as sharp, but we'll have to wait and see for that. So far it's not comfortable. We have the MACD coming down to this point, which certainly is not as bad as here, but we still have next week to go. I think there's going to be some selling into next week. We'll just have to see how severe it is. But definitely the RSI, we're a little bit lower than we were way back here. But again, the elevation is different. So maybe we're not as bad off. Into the stochastic, definitely we can see the bottom here at this point, and we've had some previous bottoms near that 20 line, such as back here and then even here. So will this serve as a foundation for us to do another step on up here in the near future? I hope so. I think so. Moving here into the volume. Volume does not look as severe as it did back in February. And then into the Williams. Same sort of thing. We've come all the way down to the bottom and bounced off. So hopefully this can serve as another stepping stone. Moving on up here. If you recall in previous videos, I did want to have a sell-off, but only down to this point here so we could have the foundation at that level with regard to the price chart moving from previous foundations. So I guess it's my fault. The old adage of be careful of what you wish for. So definitely a bad week. But as one subscriber had indicated in a previous posting, which is if you know or have a sense of some weakness coming up, that helps prepare and then also helps you move through that weakness in your understanding. So hopefully the previous videos that I told you that we were heading on down to hopefully a new foundation level, didn't realize it was going to be this far down. But hopefully that information, you can use that to prepare because there's always going to be these sell-offs coming. So always be prepared for those. Have that dry powder. I have a video coming out tomorrow with regard to dry powder. So until then, that's ChewDog Charts. Thank you.